Let's take a look at exercise 9-12, and in this case you will notice I have kept my Xbook and the Excel file open at the same time simply because there's a lot of information and it's easy for me to show both at the same time. We're working on a sales and selling and administrative expense budget. This is an overhead budget. They combine operating expenses for budgeting purposes in the selling and administrative expense budget. For the first 6 months of 2017, the following data is available. The sales in quarter 1 is going to be 20,000 units. In quarter 2 is going to be 22,000 units. The variable cost per dollar of sale is sales commission is 5% of sales, delivery expense is 2% of sales, and advertising is 3% of sales. The fixed cost per quarter is sales salaries, office salaries, depreciation, insurance, utilities, and repair expense. The unit selling price is 20. They've asked us to prepare the selling and administrative budgeting expense budget by quarter, which means quarter 1 and 2 for the first 6 months of 2017. So the first thing I'm going to do over here in this budget is I'm going to write down how many units I expect to sell. Let me just make sure I'm using the correct color over here. Yeah. I expect to sell 20,000 units in each of these months, 20,000 and 22,000 in the first 2 quarters. My selling price per unit is 20. That hasn't changed. They've told us unit selling price is 20, which means the sales number is going to be 400,000 and 440,000. Now I needed this information over here in order to calculate the variable cost. Okay, what's the variable cost? I've been told the variable costs are sales commission, delivery expense, and advertising. They are 5%, 2%, and 3% of sales, which is why I needed that sales number. Once I have these sales numbers, I can do those calculations. So 5% of sales is 20,000, 2% of sales is 8,000, and 3% of sales is 12,000, giving me a total variable cost of 40,000. So also you can see over here 5 plus 2 plus 3 is 10. So 10% of sales is a variable cost. But in our budget, we want to identify each of these individually. The fixed cost, they've told us what they are per quarter. So we just list all of these costs over here. And as no additional information is given, it's going to be the same for both quarters. So you add up the two columns. So we have fixed cost of $27,000 for each quarter. Now we are finally ready to add up which numbers? The variable cost, let me do this. The variable cost and the fixed cost, we add those numbers up in order to come up with our final numbers, which is 67,000 for the first quarter and 71,000 for the second quarter. So basically your units sold increases, therefore your sales increase, therefore your variable cost increase. Fixed costs are going to stay the same. Could any of these numbers be controlled? Highly unlikely. They're all going to stay what they are. Okay? But this gives you an idea as to how we would prepare an overhead budget. This is one of the types of overhead budgets. Basically, you're looking at that these are not directly, the fixed costs over here especially, are not related to the volume of sales. You have no control over this. This one you have control, however, those are necessary evils. You have to pay sales commission in order to motivate the salespeople. And in a lot of businesses, their employees work, sales staff work purely on commission. So you don't want this number to be low, because if they're not making any commission, they're not making any money at all, and they're highly unmotivated employees, and you don't want them on the floor. You want to get rid of them. So this is an example of our overhead budget.